ever say to yourself or hear somebody else say, I think that would be a good business. I think that would be a good fit to our current business. I think those cash flow in the bottom line would be accretive to what we're already doing. I think we could go ahead and make this happen. It shouldn't be about feelings. It should be about knowing where you are, where this business is, where the industry is, where's the marketplace going. Take it from thinking to knowing. That's what we do. I'm Brian Beaulieu, CEO, Chief Economist of ITR Economics, and we're first in forecast worldwide. We've been doing this for 73 years, helping companies determine when's the best time to make their moves. We want to work with you to figure out when's the good time to make this acquisition. Is it the right acquisition given where we are in the business cycle, where the marketplace is going? How do we mitigate risk? Every acquisition involves some risk. How do we mitigate that risk? Is it the right time in terms of interest rates? We can be there for you. We can be partnered with you to figure all this out. It starts with knowing where you are in the business cycle. You want to buy low, right? The green line is U.S. total industrial production's annual average. And we know when we're going through a low because of our objective quantitative measurement of the economy, leading indicators. We know when these lows are going to happen. We know years in advance when we are going to get a low, within plus or minus a quarter usually. We anticipated the Great Recession of 2008, 2009, 3 years beforehand. These things are foreseeable, and therefore, when is the best time to be buying a business in an industry, dealing in a certain market, is all part of what we can look at with you, for you, partnered with you. Leading indicators can help. Knowing the stock market trends can also help. The brown line here is the S&P 500 index. It's a weighted index. It tends to be exaggerated movements by a relatively small number within the 500. And the blue line here is the total number of U.S. mergers and acquisitions. Are we in a period where we're going to see a lot of activity, or are we in a period where there's going to be fewer and fewer mergers and acquisitions compared to the year before? We can see that partially depends on the stock market. We have quantified ways of looking at stock market probabilities. We don't try and time the market. No one can time the market. That's not our thing. Our analysis suggests that we are moving into another one of these periods right here where the stock market isn't going to be performing all that well. That has a very real bearing on the number of opportunities we're going to be presented with. That's part of what we can do. We can tell you what are the odds that we're going to be in this rising trend where there's more and more opportunities for acquisition, and when we're going to be on one of these downsides where there's going to be fewer opportunities. That has to impact negotiations. That has to impact what it is you're really looking for. Some companies are going to do very well in these rising trends when the stock market is going up, and they do relatively poorly when the stock market is flat. Which business, which of those two types of businesses are you thinking about buying? And when you're putting together the package, what are you doing in terms of interest rates? Because interest rates are going to move up and down in association with inflation. Right now, inflation is going up. Interest rates are staying down because the Federal Reserve, the bond market, thinks this is transient inflation. We're not here to disagree with them. But notice over here, the next low in inflation is happening at around 2%, much higher than the last three lows, higher than what we saw back here also. The die has already been cast for that to happen. And when that happens, that means we're in a whole new interest rate realm. And those interest rates matter in terms of the package that you can put together, in terms of what you can afford to put together. We want to work with you. We're really good at what we do. Let's find out where the business cycle is in terms of this acquisition. What's happening in that market? What's happening in that industry? So that you can be buying low. Let us look at the interest rate, inflation, competitive environment. Is this industry growing really, or is it a zero-sum game and you're just going to have to take somebody else's market share? That's a totally different landscape. We're really good at this stuff. We've been doing it a long time. We want to partner with you. Give us a call. Brian Beaulieu, ITR Economics. This whole team is at your disposal. Looking forward to hearing from you.